Hey guys, welcome back to RWM Finance. So, little change of location. I'm moving apartments right now, but I still wanted to get this in. That way I could keep the videos up for y'all. That way y'all could still keep learning and keep investing in yourselves. So today I wanted to talk with y'all about the ABCs of investing. As an investor, we always wish we knew what the market was going to do. But sadly, not many people can predict what the market is going to do. We aren't all Warren Buffetts or Ray Dalios who can predict what the market is going to do more often than not. But even then, they're not perfect. They're humans just like you and me. Warren actually sold off all of his airline stocks due to this coronavirus. And now they are actually starting to climb back up. But hey, he's Warren Buffett, and I'm sure he knows something that I don't, and I'm sure that he's got a plan for all of his investments. So if you haven't subscribed, please scroll down and click that subscribe button for me real quick, and we're just gonna keep going. So since we have no control over what the market is going to do, I'm going to go over the ABCs of investing and what you can control, which is what you should be focusing on as an investor. Remember what Benjamin Graham said, who is the author of the book, The Intelligent Investor, which I have the link for down in the description bar below. Make sure to check it out. It's a really good book. Graham stated that people who invest make money for themselves, but people who speculate make money for their brokers. We want to be investors, not speculators. Speculators invest with their emotions, which is something that we should not do. As I stated in my video over the key points of Rich Dad Poor Dad, keep your emotions out of your thinking. Speculators will chase the next hottest stock and they will try and predict what the market is going to do, while an investor focuses on what he or she can control. So let's get to those ABCs. So for letter A, we have allocation or asset allocation, which is where your money is going. Is it going into equities or stocks? Is it going into fixed income? Is it going into real estate like an apartment complex, a rent house, or a duplex that you can rent out? Is it going into commodities? Or is it going into alternatives? Or are you holding it in cash? Sometimes if people are expecting a recession or a dip in the market, then they will hold their money in cash in order to scoop up stocks or other investments whenever their prices fall. The thing is that you can control where your money is going. You might not know what the next best stock is, and that's perfectly fine. Focus on where your money is going and be consistent with it, and it will pay off far greater than chasing the next hottest stock. Now we're going to move on to letter B. Letter B stands for behavior. Are you allergic to red ink? Take your emotions out of investing and be practical. Like Warren Buffett says, unless you can watch your stock holding decline by 50% without becoming panic-stricken, you should not be in the stock market. Most people believe that they can stomach the volatility of the stock market until they actually experience it. Give a purpose to your money. And remember your investing strategy. You know how you don't become panic-stricken by watching your stock holdings decline by 50%? You give your money a purpose and remember your investing strategy. The stock market has never not come out of a recession, so just stick to your plan and ride it out. Now we're going to move on to letter C, which is our last letter. Letter C represents costs. What are your investor expenses? The overall fees that you pay as an investor will affect your returns in the long run, probably a lot more than you would think. Some fees or expenses that you may encounter are trading costs, sales charges, manager fees, expense ratios, and taxes. By investing for the long term, it can actually cut down on some of those fees and expenses. Also, by limiting your trading, it can actually keep your costs low as well. Remember, the best way to save money is to cut out expenses. You can control what your costs are by controlling your allocation, along with controlling your behavior. Well, those are the ABCs of investing. Those are 3 things that you should focus on because you can actually control them. You can't control what the market is going to do. I mean, could anyone have predicted that a global pandemic was going to strike this year, causing businesses to shut down and the stock market to plummet? No one could have predicted that. So we should not focus on it. But you can control the way your assets are allocated. You can also control your behavior and how you react to what the market is doing. You can also control your cost, which will impact your returns a lot more than you think. And those are the ABCs of investing. So focus on them because you can control them. Well guys, I hope you enjoyed this video. If you did, scroll down, give it a like, and subscribe to the channel below. Also, if you have any questions, please leave those down in the comment section, and I will personally try and respond to each and every one of y'all's. Follow us on Instagram at RWM Finance. Remember to check out the list of books in the description bar below. Another thing to remember is I post videos every Monday, Wednesday, and Friday, so make sure to tune in for the next one. As always, thank you for watching, and I will see y'all in the next video.